Welcome everyone. In today's video, we're answering the question, what is a call option in stocks? Let's dive in. A lot of beginner investors avoid options in general because they seem tricky. But once you grasp the basics I'm about to share, you'll see how options can become a powerful part of your investment toolkit, giving you more control and potential in the stock market. So in today's video, I'm going to give you a quick introduction to call options, how they work. We'll run through an example scenario to help make it even easier to understand, and then we'll walk through how option traders make money with call options. Now, options is just a fancy word for choice. I have the option to do something. I have the choice to do something. I have the right but no obligation to do something. That's really what an option is. And a call option gives me the chance to buy something if I want, but I'm not committed. Now, that's a lot of power. There's a lot of power in having a choice. Why? Well, it's nice to have an option because I'm not 100% committed. And you can ask my wife, when we were dating, I was one of those guys that had a hard time committing for sure. I wanted to keep my option open maybe a little longer than I should have before I flat out was ready to commit. And so you think about that. Let's say that a person had a house. Let's leave the stock market for a moment and let's talk about something people are already familiar with. I have a property and someone comes to me and they say, Andy, how much for your property? And I say, $1 million for this property. And they say, gee, you know, I'm not so sure I want to pay $1 million yet. I think I might like your property, but I'm not ready to commit. So they might say, hey, Andy, I'll give you $5,000 up front, non-refundable. If I can have 6 months of time, I'll lock in that price of $1 million, but I don't have to commit. And that's a huge thing because now I don't have to pay $1 million to find out what's going to happen to this property. I only have to pay $5,000. And if I like what happens to it, I'm in. If I don't like what happens to it, hey, I've only lost $5,000, not $1 million. Well, let's say that person says, yeah, Andy, here's $5,000, 6 months of time, and I'll pay you $1 million if I want to. Remember, it's my choice. It's my right. It's not my obligation, he says. I says, okay, fine. Give me the $5,000. And that guy, he does a little survey, and he finds that all around my property, there's oil wells. There's a high likelihood that there's oil in my property that I didn't know about. And next thing you know, you have companies like ExxonMobil and British Petroleum saying, hey, that property's worth $4 or $5 million easy, maybe even $100 million. Well, Jiminy Christmas, this guy, he just $5,000. He's got a contract where he can buy this for $1 million. The neat thing is he would never have to come up with the $1 million. He'd simply go to ExxonMobil and say, look, it may be his property, but I'm the one that has the choice to buy it. I'm the one that has the right, I'm not obligated, but I have the right to that property. Would you like to buy this piece of paper? Well, what's it worth? Well, if the property has oil and it's worth $100 million, well, then Exxon's going to have to pay $100 million for that contract. So what an option does is it gives you control of the stock without having to buy the stock, just like that gentleman had control of my property without owning the property. It's an amazing form of leverage. I love the real estate market because I can borrow money and take control of a house with borrowed money. I didn't have to pay for the whole thing. But unlike debt, there's no obligations in an option. You actually have a choice. The maximum amount of money you can lose in an option is the premium you pay. Now, let's say the gentleman comes to me and says, Andy, I like your price for $1 million, but I'm not so sure yet. I'll tell you what, I'll give you $5,000 for the choice to buy it $1 million. Anytime over the 6 months I sign it, I take my $5,000. This time the research goes about and they found that there's actually, before I bought the property, unbeknownst to me, there's been nuclear waste. You know, there's green slime everywhere, and the cleanup would be several $1 million. In fact, now the property's pretty much worth nothing because it would take millions of dollars to clean it up. Well, had that person committed and bought the home, he'd have been stuck with a slime-filled nuclear waste dump, and he'd have lost the whole $1 million. But in this case, he was protected because the most he could lose was his $5,000 in option money. He says, gee, Andy, you know, thanks for giving me the choice to buy this $1 million, but now that I see what's happened, no thanks. The beauty of this idea of options, as I mentioned earlier, it gives us control and choice. So if I'm not sure where a stock will go and I think it might be a hot one, rather than committing before I know what's going to happen, I can simply put down some option money in a call option. And if the price does well like I think, it's as if I'd bought it that day. I still have that good low price back in yesteryear, right? Back a few days ago or a few weeks ago. And if the stock goes down, I say, whew, I am losing my option money, but boy, look at that dip in the stock. I get to watch what happens, tie up my ability, guarantee my ability to buy at a certain price, and then after the fact, I can decide whether I want to commit or not. It's a wonderful, wonderful tool. There is risk in the market. You can lose 100% of that money if it doesn't go the way you want. Options are liquid. We have an exchange in Chicago called the Options Exchange. You can buy them and sell them. And remember, you never have to actually own the stock. If you have the right to buy a stock at 100 and it goes to 120, there's $20 of value in that they'll pay you for without even have to buy the stock. They'll buy your contract. If they can buy at 100 and sell at 120, that's value. That's there. You'll have that money right in your pocket. So there's a lot to learn about call options. I'm often a buyer. I'm often a seller. But it's a vital part of what I do every single day as an investor. Call options are crucial. Learn as much as you can about them. But in summary, a call option gives us the right but not the obligation to buy a stock at a certain price for a certain amount of time without having to commit all of the money there in the first place. It's a really fun concept. I'm excited for you to learn more about it. Now that we understand how call options work, it's time to learn about the other side of the trade, put options, the other option we have available to us. I go into detail on put options and how to use them in my video here. So if you found this video helpful, don't forget to like the video, subscribe to the channel, hit the bell notification so you don't miss the next one.